here on France 24, which means Marcus Carlson joins us. First, the French government has spelled out its strategy of how to cut the deficit.
Yes, indeed, it has, Mark. Hi there, everyone. The government has unveiled its financial plan for the next 3 years, to be specific. It's sticking to a pledge to cut the French deficit by 50 billion euros. And Finance Minister Michel Sapin stands by a commitment to bring down the deficit to 3% of gross domestic product by 2015. The plan has already caught flack, though, from critics who say that the plan is basically too dependent on growth forecasts that are too optimistic. Delano de Souza has more.
The French government is hoping business will add some spark to the economy. They're sticking to their guns with the Responsibility Pact announced in January to reduce payroll taxes by 30 billion euros in hopes it will encourage hiring. It's also outlined plans to cut public spending by 50 billion in 2 years. The country said it would respect its deficit reduction targets it's made to the EU. Authorities want France's deficit under 3% of its GDP by 2015 after granting it a 2-year extension. The government's hoping an increase in growth will bring it some relief.
The Responsibility and Solidarity Pacts will allow us to increase growth by 0.5 point by 2017 and also generate roughly 200,000 additional jobs.
The government also increased its growth forecast. The economy is projected to grow by 1% this year, 1.7% in 2015, and 2.25% the following 2 years. A value watchdog made up of auditors and economists have dubbed optimistic.
I prefer a government that's optimistic because they put in place new measures which will have an impact on growth, than a pessimistic government. And you don't have a pessimistic government in front of you.
The new plan has abandoned the president's promise to balance the budget by the end of his term in office in 2017. It will now be sent to the European Commission for inspection.
Meanwhile, companies in the Eurozone are on the road to recovery. Business activity in the 18 countries that use the single currency is close to a 3-year high. So says the research firm Market and its Purchasing Managers Index. It came in at 54 this month, with anything over 50 signalling an expansion. It was the 10th consecutive month that the reading cleared that key threshold. And we've seen basically PMI heading higher and higher in the past year or so. German business activity and German companies are seen to be leading that upturn, but France came out with a lackluster individual reading of 50.5. That's a fall from the previous month, and economists say it's upping the pressure on the French government. We're going to turn now to another troubled Eurozone country. And, well, we're seeing some good news for Portugal because for the first time in 3 years, that country has sold 10-year bonds in a debt auction. Demand was strong and Portugal raised 750 million euros at a 3.6% borrowing cost, I should say. That's a sharp difference from just 2 years ago when borrowing costs were above 17%. And it fuels Portuguese hopes of being able to exit an EU and IMF-funded bailout later on this year. We're going to take a closer look now at how the markets have been reacting to all of this European news. Despite the better-than-expected PMI figures from the Eurozone, European shares, they closed to the downside, with the CAC 40 here in Paris losing the most 0.75% to the downside. In the United States, the indices also slipped. Worse than expected new home sales weighed on shares, and so did disappointing results from AT&T from the first quarter. And if we take a look at some other company news that's shaped trading this Wednesday, higher production of commercial jetliners helped Boeing in the first quarter. The American plane maker has posted a profit of $965 million for the January to March period. That's 13% lower than last year, but better than many analysts had expected. Boeing shares, they gained 2.5% as the company also raised its full-year profit forecast. And here's a story to watch when the markets open up on Thursday. Facebook's profits nearly tripled during the first quarter in comparison to the same period last year. The social network has reported a $642 million profit for the first quarter on the back of strong advertising sales on mobile devices. The results also coincide with the news that Facebook's chief financial officer, David Ebersman, will be stepping down later on in June. And here on this side of the Atlantic, shares in French cable company Numéricable gained almost 9% in Paris trading. It came on reports that the firm had raised more than 8 billion euros by selling bonds. It's the biggest sale of junk bonds on record, and it's meant to finance the company's purchase of the French mobile network SFR. OK, that is the business headlines for now. I'm going to hand it back over to you, Mark.
Marcus Carlson, thank you very much indeed.
Thank you.
It's time now for Media Watch. James Creedon's here in the studio. Bright